Joining us to break it all down, Tony Wang, portfolio manager of the T. Rowe Price Science and Technology Fund, and across the firm in different guises. You know, T. Rowe, a big investor of Nvidia's. Okay, let's start. $91 billion, plus or minus 2% in the second quarter. It was like almost the whisper number for the sell side and the buy side, but not enough. You know, and why is that?
Hey, look, I think that the growth at this scale is just unprecedented. I don't think the market's ever seen anything like it. And I think if you think about traditional semi-investors, the playbook is to sell this type of growth, right? Because it's not sustainable. You know, the margins have peaked. But I think if you really look at what's going on at the driver of the driver, like what's going on in the end demand, I think it's like really phenomenal in terms of agentic AI really taking off. The time of work or like time of task is expanding instead of being one shot or the agent working for a few minutes. I think we're going to go towards like months of work, and that requires like a lot of compute to have an agent go off and like complete a task and think and be persistent. And then this other thing is I think that scaling laws continue to hold. Like the frontier models are getting better. The more compute you throw at it, the better they get, and you actually save money by being on the frontier because it doesn't go through so many rabbit holes in terms of trying to complete your task. So I think if you look at like the end demand, it's actually very encouraging, and I think we're climbing a wall of worry here as a result.
So the thing that I was trying to digest throughout the call is with the data points that Jensen Huang and Colette Kress put forward as evidence of that, right? The scaling laws and the dollar per token. And they go to this $1 trillion figure, which I think they clarified is Blackwell-Rubin, and it's for calendar year 2025 to 2027. And it's basically a backlog. Right, but the main overarching point is that they would argue that Nvidia's own growth is trending ahead of even the hyperscale capex growth. How do you model for that? Like, is that the math that you would do?
Yeah, one of the things that was really encouraging, I think, of the quarter is that I actually broke out like hyperscale versus the enterprise and sovereign. And so, I think the bear case is that, Nvidia can't outgrow the hyperscale CapEx numbers. But there's all this new TAM that's emerging that's not hyperscale. And, I think they continue to do well in hyperscale, but there's also new areas of agentic enterprise adoption. I think you talk to financial services firms, they're adopting a lot of this end demand that Nvidia is producing, and so I think that plus robotics that's on the to come in the future. I think that allows them to see not be bracketed in this like hyperscale kind of compute paradigm here.
Tony, slightly unusual situation, but I spoke to Jensen at some length on Monday prior to earnings. But actually, a lot of what he said about the demand-supply equation was very prescient, salient. Just listen to what he said.
We have the largest supply chain in the world. Our partners have done a great job securing supply for us, and so all of the pieces go together. The silicon photonics is lined up, everything is all lined up. It's just that the demand is much greater than the overall capacity of the world.
If you are a student of technology history, finding yourself in a situation where demand is vastly outpacing your ability to supply, even in a world where supply chains are doubling or quadrupling per annum, which is what he went on to say, that's been an enviable position. But right now, it's not moving the needle for this stock.
Yeah, I mean, I think that the market is looking at relative earnings growth and where the bottlenecks are. So capital's flowing there. But at some point, you look at the multiple for Nvidia, it's like really attractive. And in addition, like there's a point where for the growth, it is like tremendous. Looking at the PEG ratio, the expectation. So if the growth is durable, I think you can see multiple expansion actually from these levels, and that's pretty exciting for holders. And in addition, like it is the platform that a lot of this AI inferencing is going to be built on. I think inferencing is going to be much bigger than training, and training is also still growing because of scaling laws. In addition, I would say that like at this valuation, they are doing a capital return program, and so I covered Apple and Nvidia for T. Rowe, and I was super lucky to get that. And I saw like what Apple did with the return program. It didn't like re-rate the stock from day one, but over time, consistent capital return at that valuation really expand the multiple. I think with Nvidia, it could be a similar story where it becomes less cyclical, more durable as a result. So I think it's they're doing the right things here with the disclosure as well as with the capital return program. And I think it's just a matter of time here.
I think right now Nvidia's trading at like 22 times forward 12-month earnings, right? I think I'll double check it. Something you just raised is really interesting, which is basically use of capital. So the frustration with Apple is do something. And maybe that story is changing with Apple in the handover to John Ternus. But Nvidia has gone out there and invested in the ecosystem in small increments, $2 billion here, $2 billion there. How does Tony Wang read that strategy of investing?
Yeah, I think it's really smart. I mean, I think that when you're at the frontier of technology, you have to build the ecosystem and bring up the supply chain, bring up the partners. And, Nvidia has been really smart in terms of using their free cash flow to extend that. It also builds their ecosystem as well as furthers the technology frontier. So I think it makes a lot of sense. And you look at the deals they've done in the private markets, they've been pretty good. So great for shareholders, great for building the ecosystem, and they have excess cash still. So I think that just goes back to they are this single architecture platform, and there's tremendous leverage on it. You see where the margins have gone, and so that's been their whole bet from day one. I think is that they're an ecosystem company,
right.
And I think you're seeing it play through here as they build it out continuously.
We actually have a VC on later in the program whose portfolio companies, are so tied to Nvidia, and we'll have that conversation. Just to close the loop, by the way, Nvidia does trade 22 times forward earnings, but historically it's nearer to 34. Jensen has this equation: more compute equals more tokens equals more revenues. Do you see those revenues coming out the other side for all of Nvidia's customers?
Absolutely, yeah, definitely. I mean, you look at the cloud demand, you look at pricing for GPUs. I mean, these are old GPUs. Pricing's holding up phenomenally well, and you look at the enterprise demand inflection that's happening, and you see it. We see it in our own company. We're developing AI solutions, and it's eating up a bunch of tokens. Where we see the promise. Obviously, there's experimentation.
Hey, Tony.
But I think you're seeing that come through.
Just real quick, on the socials, that's what people just go nuts over, right? H100 pricing right now. Are you tracking that?
Oh, yeah. I mean, I think you think about the bear case, 24 months ago, it was that the obsolescence of NVIDIA GPUs is 3-4 years. Well, first of all, the warranty on these things are 3 or 4 years. And then also, you have that depreciation. And so you're able to adjust the pricing, but even so, the demand's been so good that, we're seeing more value coming out of the older GPUs and even A100s. People are using them.
Even A100s. If you're out there running workloads on A100s, give me a call. I want to know.